It's time to talk business, Mavericks. If you want to know about credit card processing, you've come to the right place. So let's dive right in. First, know that credit card processor and payment processor are often used interchangeably in the industry because while most non-cash transactions are made via credit card, businesses increasingly accept payments via other payment forms, such as mobile wallets, QR codes, ACH, and even crypto. But for the purposes of this video and the fact that most of these electronic payment forms ultimately do use a credit card network, we'll use the term credit card processing for now. In short, credit card processing is the process of moving money from a customer's bank account to a business's bank account. And for visual thinkers, you can think of credit card processing as a three-step cycle that works as you see here. The cycle begins and ends with the merchant, where the transaction is first authorized via the merchant's point of sale, e-commerce website, or virtual terminal. Next, the transaction is authenticated by the merchant's payment processor, which uses the card's brand network, for example, MasterCard, to tell the credit card's issuing bank, for example, Citibank, to send the funds to the merchant. Finally, during settlement, the funds are released to the merchant. Though the approval of the transaction happens within seconds, the merchant typically doesn't receive funds in its bank account until a couple of days later. It's really as simple and as complicated as that. As you can see, there are multiple parties involved throughout the process, but who are these main players and what do they mean for you as a merchant? So let's go over the main parties involved in a credit card transaction. They are the merchant, you or your business, the issuing bank, the bank that issued the customer's credit card, the card network, Visa, Amex, MasterCard, or Discover, the merchant's payment processor, and the bank that the business has their merchant account with, which is called the acquiring bank. Just note that this is not necessarily the same bank you have your business account with. For example, if a customer uses a Capital One Visa card to make a purchase, Capital One is the issuing bank and Visa is the card network. If the business uses Stripe to take payments on their website, then Stripe is the payment processor. Stripe uses multiple acquiring banks such as Wells Fargo. Some credit card networks, including Amex and Discover, act as their own issuing banks. Now, as a merchant, the aspect of credit card processing that affects you the most is, of course, the fees. But where do the credit card processing fees come from and how can you reduce them? So the main parties that take a cut of your sale during the credit card transaction process include the issuing bank, the card network, and the payment processor. The card networks set something called an interchange fee, which might range from roughly 1 to 3% plus 10 to 30 cents of the transaction, depending on various factors such as the type of the transaction, for example, whether the transaction is keyed in using a virtual terminal, or whether it's a card-present transaction. Keyed-in transactions and online transactions have a higher potential for fraud, so these type of card-not-present transactions carry a higher interchange fee than a card-present fee, where the merchant uses a physical terminal or point-of-sale system to process the transaction. Amex's interchange fees are also notoriously higher than those charged by other networks. While the card network sets the interchange fees charged by the issuing bank, they take a much smaller share of each total transaction, called an assessment fee, which might equate to about 0.15% of your monthly sales volume, plus a few cents of each transaction. Finally, the business's merchant services provider adds on their own payment processing fees, and these fees vary widely. A flat rate processor might tack on an additional 0.6% over interchange, with no monthly fees or other added fees, while a processor that uses an interchange plus pricing model might just tag on 0.2% per transaction over interchange, but also charge a $25 monthly fee. Meanwhile, a tiered processor could charge an additional 2% over interchange for so-called non-qualified transactions, which might actually comprise a large share of your business's transactions. In total, you could be charged anywhere from 2 to 4% of each transaction with credit card processing fees. You might pay the following processing fees on your average card-present POS transaction with each of the mentioned pricing models. As you can see, there are a wide range of transaction fees and monthly fees you might end up paying your credit card processor. And those fees are just the beginning. Credit card processors also tack on various other fees, such as annual fees, monthly minimums, PCI compliance fees, batch fees, early termination fees, customer service fees, terminal leasing fees, virtual terminal fees, and the list goes on. Now, what can you do as a merchant to keep your credit card fees as low as possible? Should you avoid online orders? Should you not accept Amex? Should you save money on the credit card terminal itself by using just a basic credit card swiper instead of a point of sale system? Or should you maybe not even accept credit cards at all? All of that is up to you as a business owner, but ultimately your customers want options when it comes to payments. Customers increasingly want to pay online. They want to pay with their Platinum card. They want to pay with their Apple Watch. My advice to you when it comes to saving on credit card processing fees is to be choosy when it comes to your processor. While you don't have any control over interchange fees, you can avoid credit card processing companies that use a tiered pricing model and those that require a long-term contract. Instead, you can opt for an interchange plus processor with a month-to-month contract. Flat rate processors such as Square also work well for small, low volume businesses, though most businesses will be best served by a processor that offers a merchant account with transparent interchange plus pricing. I hope that after watching this, you have a better understanding of what credit card processing is and how it works from a merchant's perspective. If you're looking for some high quality credit card processors that won't overcharge you, check out our list of recommended credit card processors for small businesses. We will link it in the description below. Thank you for watching Mavericks. Until next time.